Welcome to the stock workout where we flex on the market to make gains. In this video I'm going to be talking about Senseonics Holdings, ticker symbol SENS. And man, what a monster of a stock this is. It's an absolute monster. It has risen up so much in this last week and I am really pumped for this. One, for the gains, and number two, for the fundamentals of this stock. I think it's an absolutely game-changing company with their 180-day sensor that they've got that you insert into your arm. It's an absolute game changer of technology and I absolutely love it. Now in this video there's a couple of articles that I want to get through, so do bear with me. They're not too long, they're a little bit short, and then we're going to take a look at the charts, do a bit of technical analysis, give you a few price points and see what the price action has been doing in this last week. Just to start off with, I mean, I pointed out this bullish flag here. Yes, it did take an extra day or two and then we saw that breakout. I had the charts pulled up and I was watching them alongside while I was working, and I was just waiting for this breakout. I drew that flag formation, that pennant formation in my last video, I believe it was, or maybe the one before, and we were just continuing. We were slightly dipping down, but we were continuing that consolidation, and then we saw that breakout. So I was really pumped and really happy for that, and I watched this literally go from $3 to $4, and in after hours $4.25. So I feel personally invested in this. But right, let's get on to the first article. So the Motley Fool, why Senseonics Holdings popped nearly 11% today. So on Friday, several posts in the shockingly influential Wall Street Bets Reddit community talked up medical device maker Senseonics Holdings, which promptly shot up to close the day 10.8% higher. The previous day, posts appeared in the subreddit and elsewhere on Reddit extolling Senseonics' virtues and hastening to mention its considerable short interest, nearly 26% of the float. So in sum, in the eyes of Wall Street's bets crowd, we've got a company with real potential that is also a juicy candidate for a short squeeze. This bit here is something I completely agree on. This is a real potential. This company's got real potential. It is solving a real world problem, and it is shorted over 20%, 25%. This is saying 26%. We'll take a look at Fintel later on and see what it is on there. So I do really believe in that sentence there. But okay, diabetics, as we know, diabetics need a lot of injections. Senseonics concentrates on glucose monitoring systems for diabetics, a large addressable healthcare market. It's a young company that is catching fire a bit, with Q1 revenue leaping to 2.85 million from only around 36,000 in the year ago period. Although its net loss deepened considerably, mostly because of a big derivatives related accounting charge. But recent news from Senseonics is quite promising. Last week, the company released results from a 180-day study showing that its Eversense continuous glucose monitoring system showed a hypoglycemic alert detection rate of 93% for its primary sensor and 94% for its secondary one. And then it says, now what? But of course, Wall Street Bets isn't necessarily focused on the long-term potential of a stock. Many community members are here after the quick money that can result from a short squeeze. While Senseonics could have a bright future as a target of that community, it's likely to be volatile in the coming days. So perhaps it's best avoided by cautious investors for now. Now that's something everybody has to consider for themselves. Are they in it for the short squeeze? Are they in it for the long run? It is a company that solves real world problems, but it also has a very high short interest, so it could quite easily have a short squeeze. So you got to take a look at it in that aspect. Maybe another thing is, maybe you might want to consider it to its competitors like Dexcom and Medtronic. Medtronic is slightly a bigger company. They also do insulin pumps as well. Dexcom also do insulin pumps, so they are slightly bigger companies, but they are involved in this CGM space. So if one was to consider its competitors, Senseonics competitors, and see if Senseonics could compete with them and how big of a company they are, then it is worth taking a look at them too, because there is a huge addressable market, healthcare market for diabetics, and Senseonics develops products for them. So that's this article here from the Motley Fool. I'll leave that in the description down below. And the next article here says Sense Stock. Why Reddit is betting big on a short squeeze for Senseonics today. Redditors are setting their sights on a speculative biotech name this morning. I disagree with that. It's not a speculative biotech, it is a proper biotech. Just minutes into the day's session, and Senseonics Holdings already eclipsed its daily average trading volume. But with no real news to report on the company's going on, uh, goings on, what could be driving Sense stock higher so quickly today? Say it with me now, Wall Street bets. Senseonics is a small Maryland-based pharma company which specializes in the development of products made to ease the burden of diabetes monitoring. Notably, the company is behind the only FDA-approved long-term continuous glucose monitor, Eversense. That's what the glucose monitor is called. Senseonics named it Eversense. Recently, the company saw shares rocketing on news of a promising trial. A 180-day study of the company's primary and secondary glucose monitors shows promise in the efficacy of implanted monitoring products. As a result, the stock shot up over 30%. However, this study's results are old news, only by a couple of days. What's behind the big movement today with no announcement since then? So the article basically goes on to talk about Wall Street bets. It has a 25% short float. Retail investors are smelling it out like a bloodhound. And then it just goes on to say mentions of Sense on the subreddit are increasing over 1500% in the last 24 hours. Users are commenting on the high short interest and loading up shares in anticipation of a squeeze. Then further on down here, it says how they were able to squeeze Wendy's on Wednesday and then moving to Geo Group on Thursday before landing on Sense today. So I'll leave the link to this in the description down below as well. And finally, this one's a short article from Seeking Alpha. It says here, Senseonics stock continues the momentum amid Reddit chatter. And there's one point, the main point that I want to point out here is that it just talks about Wall Street bets and after a gain of 17.9%, blah blah blah. The main thing I wanted to point out here is this bit here. The results indicated a 9.1% of the overall mean absolute relative difference, MARD, against reference value for the primary sensor compared to 8.5% for the secondary sensor with modified chemistry, SBA. I'm not sure what SBA means, but MARD means mean absolute relative difference. Now, MARD is considered the most popular method of measuring the accuracy of a glucose monitor. So G6, the latest iteration of glucose monitors from Dexcom, and Dexcom is another company that produces glucose monitoring system, continuous glucose monitoring systems. So they had a MARD for their new sensor G6 of 9.0. So they have a MARD of 9.0. And then it says, meanwhile, Abbott's Freestyle Libre 2 had a MARD value of 9.3%, 9.2% for adults, and 9.7% for pediatrics. Why is this important? Why do I want to point this out? Reason being, Dexcom G6. So Dexcom G6, it has a sensor that is needed to be changed every 10 days. And Abbott's Freestyle Libre 2, that has a sensor that you apply to the back of your arm also, but that has to be replaced every 14 days. Now, Senseonics has this sensor that needs to be replaced every 180 days. Now, there is a big difference between 10 days, 14 days, and 180 days. You've got to take into consideration that a type 1 diabetic has to do finger pricks. Every day they're doing finger pricks, testing on their fingers to see what their blood glucose levels are. And then when this technology came out that they could measure their glucose levels from the back of their arm just by scanning it and having a sensor on the back of their arm, there's a big difference between doing finger pricks every single day, multiple times a day, to 10 days, to 14 days, and now to 180 days. And the important thing here, and this will come into when Sensonics want to get approval, they need to show that the mod is actually really good. Now, the mod, because obviously if the mean absolute relative difference is huge compared to what the sugar level is, so what the glucose levels are, then they're not going to get approval, because then the technology doesn't really work, does it? If the absolute relative difference is too great, and it is different to what the actual, because the most accurate way of measuring glucose levels is by a finger prick test, because you're measuring the blood directly. Now, if their sensor, if there's because their sensor doesn't have blood, it doesn't test the blood specifically, it has a mod value. And if this mod was way off what the actual blood glucose levels were, then they would struggle to get approval, if I'm honest. So they had a mod of 9.1%. That's comparable with Dexcom, because Dexcom had a value of 9. And Freestyle Libra has a value of 9.3 when you take into consideration adults and pediatrics. So they fall well in line with their competitors, and their competitors have got approval. So Sensonics will most likely get approval as well. Based on this mod, it shows that the sensor actually works. And this is what was important. This is what I wanted to point out to you guys. I think it's also worth, for those of you who are not familiar with it, it might be worth checking out Dexcom, checking out Freestyle Libra as well. All of them are great products, and Sensonic has stepped up the game with a 180-day sensor. I think it's not game changing, it's really life changing. For any type 1 diabetic, that would be life changing, because you've got to take into consideration another thing as well, and this is one thing that I want to point out. Most of the diabetics that will get this sensor, 180-day sensor, most of them will probably be type 1 diabetics, and type 1 diabetes occurs mainly in children. It occurs mainly in younger people. Type 2 diabetics occurs in older people more often, but type 1 mostly occurs in younger people. Now, if you have a child and your child is a type 1 diabetic, would you not be happy with having a 180-day sensor inserted into the back of their arm, where that child doesn't have to do finger pricks? Because children, obviously, they're not going to like finger pricks. Some will be scared, some will start crying, yada yada yada. They're not going to like doing finger pricks daily, multiple times a day. It makes the life as a parent easier, and it makes the life as a child easier having an 180-day sensor. These are things you have to take into consideration, and this is why I think Sensonics is absolutely game changing. Now, I've gone on a little bit, so this is what I just wanted to point out. This will be the link for this will be in the description down below. But now let's take a look at Sense. Let's take a look at the charts, bit technical analysis, what the chart action is. So, previously I pointed out this flag formation, this pennant formation that was forming here, and we broke out of that. Now, a support level I pointed out was $2.80 range, because we had a solid support here for $2.80, and we absolutely broke out of that. We closed on Friday at $4.01, up 10.77% for the day, and in the after hours we went up to 4.25%. Now, let's take a look at the short interest before we get into this. So for Sense, this is on Finviz. For Sense, short interest is showing at 25.81%. So just a hairline under 26%. That is quite high for short interest. That is quite high short interest. Which is why a lot of people think this is going to short squeeze, which is totally fine. Now, on the screen, I've got the 21-day EMA alongside the 50, 100, and 200-day moving averages. I have got the volume and the RSI on the screen. So, from this breakout here, we can see that 21-day EMA is above all three moving averages, so it shows that bulls are in control. That's quite bullish. That's a bullish indicator right there. Volume has picked up. Volume has been quite big. You can see it if I zoom out. You can see from all of these previous weeks and months, you can see volume recently in the last week or so has picked up huge. So volume on Friday was 177 million compared to the average 10-day volume of only 75 million. So over double the volume that we had on Friday. Now, the RSI is currently sat at 64, Anything over 70 is overbought, anything under 30 is oversold. So we are sat really close to the overbought territory. Throughout the week, we have been having these small bull flags being set up, and a one here, and then we had a breakout. We had another flag formation and a breakout, and now we have just had a huge day in the after hours on Friday, where we just absolutely ripped it and went all the way up to $4.25. Now, I pointed out in my previous video the resistance level we were looking to break through was $3.91. We absolutely smashed through that. We closed above that, and we even increased in the after hours. So $3.91 was that price point that we needed to break through, and we have smashed through that. So I'm going to have to give you a new price point, aren't I? If I zoom out, and I'll have to go back quite a way back to see where the next resistance lies. So we had this support level here, $2.80. We had a resistance level, $3.91. That was back here in March when we failed to break through. And now the next resistance level, I think, is coming in right at $4.50. So if I mark that on the chart there, $4.50, that will be the next resistance level, because that is a level on the 25th of Feb, 24th or 25th of Feb, we failed to break through. We hit that price point, and then we saw the price decline. So $4.50 is the next target that we need to break through. We are close. We are quite close to our all-time highs. All-time highs coming in at around $5.70. So we are not too far off. We do have a little way to go to get there yet. However, we are well on the way there. Now, a catalyst that may come out for this will be the approval of the 180-day sensor. However, don't expect that to come too soon. It does take time for the FDA to approve any medicines or any medical devices. It does take time. After they've released the news that it works, just this week and last week, and very recently they've released that news, that approval isn't going to come within a week or two. It is going to take a little while. But with that being said, we are trending upwards. We are setting a series of higher lows and higher highs. RSI is at 64, so we may see a slight pullback. However, the price point we are targeting next is $4.50, and we should and will need to still hold above this $4.91, which is why I've left that there. That is a level that we want to hold above. Now, I've switched onto the 5-minute chart just to give you the previous week's prices. And as you can see here, this was the support level, $2.80. We held above that. We formed a flag here and we had a breakout. And now we are just trending higher, setting a series of higher lows and higher highs. We are approaching that $4.50 range. What we want to do is we want to break through $4.50 and hold above it. Currently, we have broken above $3.91, so we want to hold above that. If you see a breakdown below $3.91, then we may see the price bounce around this area here. Obviously, $2.80 being the main support. Under $2.80, then we will see quite a retracement going further down. So price is currently at $4.25. $4.50 is that first resistance level, but we still want to hold above $3.91. On the 5-minute chart, RSI is at 55, so it is pretty much neutral. As I've said, anything above 70 is overbought, anything under 30 is oversold, so we are pretty much neutral, neutral being 50, so that's a good thing. What you want to keep an eye out on is obviously volume. We do want that increased volume to be sustained, as you can see here from the 4th of June. I think that's probably when the news came out. We have had sustained volume and we are setting a series of higher highs and higher lows. So that's it for this video. I've given you the short interest as well. So this is actually a company with solid fundamentals that is also primed for a short squeeze. It is a 2-in-1. For those who want to hold long term, you can hold long term. Senseonics is very competitive with its competitors, Dexcom, Medtronic. It's got a brilliant product, and it also has that short squeeze potential. For those who want to play it both ways, you could, when it does squeeze, and if you do see a huge run up really quick, what usually will happen is after a huge run up, at some point you will see the price come back down. That's just profit taking. You may wish to take some profits, you may wish to leave a little bit in just to let it run up to, for the future. But that's it for this video. If you appreciate that, drop it a like, hit that subscribe button so I can keep bringing you more content, and I'll see you on the next one.